What is going on, traders, and welcome to this video. In this video, I will teach you everything you need in order to build the perfect model. And I will go into depth as to what a model is compared to a strategy. But first, let me quickly introduce myself. I go by the name IdentityFX, and I have been trading the financial markets in general for over 7 years. Later on, I have specialized myself in Forex trading. I manage multiple six figures with prop firms, and I also have received countless of job opportunities with hedge funds. For anyone who is watching, and for anyone who is actually serious about trading, I encourage you to please focus on this video, because this video is going to be all you need in order to throw your complete career when it comes to trading around. If right now you are a losing trader, after this video, you will know exactly, and I mean exactly, what to do to become a profitable one. I am not going to give you a strategy. I am going to teach you how to build a strategy and actually unlock the holy grail in trading itself. If you are not serious about trading and if you are still on the look for a 90% win rate model, I do encourage you to actually switch off of this video and keep on going through that loop of continuously looking for a model that when you backtest actually doesn't work and is going to disappoint you in the end anyway. So for anyone who's serious, let me quickly cover what we are going to talk about. So in this video, I will teach you exactly how to build a model, how a model fits into a strategy, how you can add confluences, and how you can build a model that's both your own as well as is perfectly aligned with your personality and that you actually fully understand and resonate with. After this video, you will have all the tools needed to actually start building your own model, start trading your own model, and can start looking forward to actually becoming a profitable trader. So let's not waste any more time and let's get right into the nitty and gritty. So first and foremost, what is a model? Because a lot of people don't actually understand what a model is. A model is basically a pattern in the market that repeats itself over and over again, that you are able to identify and that you are going to focus on to build an edge around. What is not a model? A model is not a pattern in the market that is going to give you consistent profits instantly. That is not a model. That is not what we are going to be focusing on. A model is simply something in the market that repeats itself, something that provides you with a place to put your stop loss, a place to put your take profit, and something that you can spot without having to add too many subjective feelings or notions to it. So when it comes to overcomplicated strategies like some subjective SMC strategies, I highly encourage you to avoid those things. I want you to keep it simple. And if you want a really strong technical baseline, what I can recommend is a really simple ICT strategy. Now, of course, I teach ICT in my elite community. If you are interested in such a thing, and I'm telling you, this is not something you need, but it can help you to build a strong technical foundation to start building a model of. The links for that will be found in the description, and you will find plenty of free content on my YouTube channel. So by no means is this a sales pitch, it's just something that I want to mention. So again, a model is just a pattern in the market that repeats itself over and over again. You can simply identify where you have a clear rule of where to enter, when to exit, so where your stop loss is going to be, and where to take profit. It's as simple as that. So what is a model compared to a strategy? Because when all of the traders or aspiring traders are looking on YouTube and searching for a strategy with a 90% win rate, what is the difference between a model and your strategy? A strategy is basically a combination of your model, proper risk management, proper psychology, proper confluences, and so much more. The model is basically the core you are going to be designing before you can actually create that complete strategy. And I will also give you the steps in this video on exactly how you can start building that strategy yourself. Why is a model so important? If we do not have a model, we do not have clear rules around when do we enter a trade, when do we exit a trade. And although you might have started to build up, and this is a really important thing, although you might have started to build up certain intuition in backtesting, that doesn't mean that that intuition is going to be available to you when live trading or when demo trading, whatever you are trying to do outside of backtesting, because intuition is only there if you can rationally think about it. So it is very important to actually have a model that is relatively subjective, that you can continuously execute, and that you can start training as a reflex. And then you can ask yourself, well, okay, I know why I need this model, but why do I need to have one and properly execute that specifically every single time? And that is simple. The market is chaotic. If you can just focus, like if you look at this complete chart that we have right here, if you can just focus on one of these moves, and it can be as simple as this high right here, going to the low, and you can capitalize on that, you do not need to worry about anything else that is going on. And this is something that I teach as well. This is the market maker sell model. It's also publicly available on YouTube, so you can check that out for yourself as well if you're interested in that. But if you can just focus on one of these specific moves, you are not going to have to worry about everything else the market is going to do. And if you start mastering one single move in the market, you are going to become an amazing trader. And there is a really nice quote that I like, and I always tell my students, and it goes as follows. I do not fear the opponent who has practiced 1,000 kicks. I fear the opponent who has practiced one kick 1,000 times. And doesn't that make sense? Because if you practice a certain trade entry 1,000 times, do you not think that you will start noticing things? So let's actually cover how you can build the perfect model. The perfect model needs to have 4 main things. First and foremost, it needs to be really simple. And what I mean by simple, you can easily spot your model in the session that you are trading, and you just have to be able to spot it once or twice a day. That's enough. You can even look at multiple pairs, but it needs to be simple. It needs to be rule-based. It needs to suit your psychology. You need to be able to implement proper risk management, and you need to start unlocking a small edge with it. It doesn't make any sense to start trading something that doesn't have an edge at all. But there is more to that to come, and I will get to that. I will first start to explain why it needs to suit your psychology. Let's say you join a course, and in this course, someone is pushing onto you a model with a 1 to 10 risk to reward ratio. Now, this usually means that if you take around 10 trades, you will most likely be losing 8 of them. If you win 2 of these trades, you will net 20 R, and you've only lost 8, which means that in the end, you are remaining with 12 R, for example, right? Makes sense. But let's say that every single trade you start making mistakes, because when you lose a trade, you get angry and you start taking entries that are completely irrelevant to the model that you are trading. Let's say you simply hate taking these losses. Let's say you are really devastated by losses, and when you do take them, your day is just a dark cloud. You walk around in your house, you're mean to your significant other or your parents or your family, whoever it may be. There's just a big dark cloud around you because you are so sad that you took a loss again and again. And if this happens 8 days out of the 10, then probably this is not the model for you. Now, if you have a really hard stomach and you couldn't care less about a loss, perfect. This model might be perfect for you, because I know a lot of traders who have a really, really low win rate, but a really high risk to reward, who are massively profitable and are super happy with that. But usually for a beginner, it's going to be much more interesting to have a lower risk to reward. So basically you will have a 50% chance of winning, a 50% chance of losing. And if you take 2 trades in a day, usually you will have a winner and a loser. And of course, there are still going to be days that you lose, but you are going to limit these losses. You are not going to spiral out of control, and so much more. And then the risk management. Why is this important? And the main thing you need to be looking into is, where can I place my stop loss? And how can I manage to only lose, let's say, 0.5 or 1% per trade? And if you constantly place that stop loss, you limit yourself from taking huge hits on a single day. Right? If you have a model that has a simple spot to put your stop loss, which is not subjective at all, you have an objective spot to put your stop loss, there is never going to be any doubt of, hey, did I place my stop loss right? No, you follow your rules, you place your stop loss there, it either works out or it doesn't. And then another important thing is having a small edge. Now, a small edge can be exactly that. Let's say, because it's very important to know that, let's say you find a losing model. Right? Let's say you have a 1-to-1 risk to reward model. You test your edge over 500 trades and you notice that you only have a 30% win rate. Actually, a lot of people look at that like, damn, my model doesn't work. But if you clearly think about this, if your model doesn't work, it's a 1-to-1 risk to reward, you're only winning 30% of trades. That basically means that if you flip the model, if you put your take profit where your stop loss is going to have to be, then you will have a 70% win rate. And I see a lot of people who are taking these 1-to-2 risk to reward trades who have a really negative win rate. And when they flip the model, so when they go to a 1 is going to be your profit and 2 is going to be your risk, right? It's a negative risk to reward ratio. But when they do that, they actually start seeing great results. So you need to have that small edge. You need to be able to at least, and that's a baseline that I give to my students, is to have on 100 trades, the best thing you could have is around 10R. Meaning that if you take 100 trades, you would lose around 90%, 90R, and you would be remaining with around 10R, if that makes sense. So basically, if you're trading with 1% risk, you take 100 trades, over those 100 trades, you will make 10%. That in and of itself is already a really good edge to start with. And I will go more into depth as to how to improve this small edge. Now, the main question is going to be, so how can I unlock that holy grail with such a simple model? And the answer is really simple. You need to collect tons of data on your model. You need to have thousands and thousands of trades recorded. You need to backtest. You need to take screenshots of these backtested trades. You need to annotate them, and then you need to review them. And a lot of people in my community, I also give this objective, and yet I see those people, they are a member of my community, and we always push the greatest advice. Some members, they make it, they leave, they are gone, they have what they need, they have their edge, and they no longer need a community, they no longer need a mentor. But what I am pushing to my students is to actually start working on a model. As soon as they have that model, I tell them, okay, now go for at least 500 recorded trades on this specific model before switching. Because think about it, if you go to a certain model, right, that model usually resonates with you. It is something that you can see. Now, let's say you start playing around with it, you start testing it, you take a few losses and you think, yeah, hey, this is not it, I'm gonna look for the next model. You've just lost all of the time that you have spent with that previous model. Plus, you are likely going to be looking at something that is not resonating with you as much as your previous model, because you picked your previous model because it resonated with you. So instead of hopping from model to model, what I recommend you to do is to stick to one singular model, challenge yourself to try and backtest 20 trades a day. Now keep in mind, backtesting a trade usually only takes about 3 minutes. You go into, let's say, FX Replay, you find a trade, you take the trade, you either win or lose, you take a screenshot, you do your annotations in your journal, and at that point, probably 3 minutes have gone by. Now do this 20 times. That is an investment of 1 hour a day, but in 1 hour a day, you are going to be unlocking 20 references that you can look back into in the future of that specific model. Now, if you do this for 1 month straight, you are going to have 600 backtested trades. A lot of people, they get intimidated by this. And, oh my God, 500 trades. Why not? You are spending so much time on becoming a profitable trader already. You are spending so much time. You've probably been trying to become a profitable trader for months, some people even years. And yet, if you just stick to one simple model, you collect 1 month, 2 months, 3 months of data, don't you think you are going to be absolutely amazing at that specific model? I am convinced that you will be. If you stick to this habit, right, of collecting 20 backtested trades a day, by month 2, you will have over 1,000 trades to look at, to reference on. And trust me, over more than 1,000 trades, you are going to start to build some muscle memory and some intuition that you can use to actually find confluences. Now, when it comes to data collection, it doesn't have to be something fancy, not at all. You can simply use the free tools that are available, like for example, Notion. I personally really like Notion because you can also export the databases and data sets that you collect there. You can do all kinds of calculations on them. But I also know a lot of people who simply use Excel or the Google Spreadsheets application, which is also completely free. So by all means, go for that and just collect your data in there. as long as you have something that you can look back to in the future. And it's really important to screenshot everything, right? Let's say you trade the 15-minute, you trade a specific pattern there. On the 15-minute chart, you are going to have to take that screenshot, also include the higher time frames for the future. You might not need it now, but you might need it in the future. And write down everything you can think of that might be relevant to this trade. Now, how to find confluences and how to find things to actually look at and annotate, right? And that's really simple. What I recommend you to do is, let's say you have been collecting data for 1 week and it is now the weekend. You have collected 140 trades. At 140 trades, I would say even 100, you just start looking at your winners on one screen, or even, and this is not really good for the environment, but what I personally did is I printed all of my losing trades on pieces of paper and I printed all of my winning trades on pieces of paper. And trust me, if you stack these next to each other and start to compare them, if you do not see anything, you are most likely blind, right? Because you are going to see something. It can be small things, right? Perhaps the reaction that you saw to your support zone or to your supplier demand zone, or your candlestick pattern isn't there, or the reaction was too small, or the reaction was too massive, your stop loss was too tight, your stop loss was not too tight. There's going to be small things that you are going to notice. Now, let me give you a really, really important example of a really strong confluence. Let's say you are looking at your losing trades and you notice that in 80% of the cases of your winning trades, when you get filled, your position starts running to, let's say, 1R. If price returns back to your break-even point, so to the point where you entered, you notice that in 80% of the cases, price will go for your stop loss. This means that if you simply, when you're 1R in profit, if you manage BE, you will avoid 80% of losses already. So that is something super, super important to implement. And so, a small change like that, can mean tens of percents over a year in profit that you make. And it is really important, and something I really like and recommend everyone to do is to actually read the book Atomic Habits, which is really going into the nitty and gritty of the compounding. If you simply focus every single day on getting 1% better, and you can reflect this towards your model, your goal is going to be, I want to make my model 1% better every single day. If you do this every single day for a year, you are going to see significant results. And it doesn't stop there. You have your confluences now. You probably, after a few months, right, after you have collected your 1,000 trades, I am 100% sure you will have your perfect model, your perfect strategy. You will have something that is really, really powerful. But it doesn't stop there, right? A soldier who fights with his sword always needs to sharpen his sword for the next battle, because your edge will over time start to decrease, because we always need to adapt to the markets. And that's why it's so important to continuously collect data on your model. You might notice that in periods of trending markets, ranging markets, doesn't matter, that the behaviors are different. In comparison to previous year, let's say you are a professional and profitable full-time trader and you have data on the previous year. You notice that your stats are changing significantly. Now look at exactly what is changing. We constantly need to evolve. And if you do this, and if you put time and effort in doing this, I guarantee you that you will succeed. I guarantee it. And it's as simple as that. And that's it. This is the Holy Grail. This is the Holy Grail. And I can say this with 100% confidence that if you do this, if you stop your search for the perfect model and perfect strategy and actually start putting in the work yourself, looking at your own model, your own psychology, your own data, this is when you will make the breakthrough, because every single strategy can work as long as you optimize it, right? And you are going to start building intuition. It's important to make this intuition in something objective, right? So when your intuition is noticing, I'm not going to take this trade because it's likely going to lose, that's what your intuition is going to tell you after 1,000 of trades. You are going to have to find objective rules as to why exactly you think that that trade is not going to work out. And if you do so, the sky is really the limit. You sometimes hear people with insane win rates and who are insanely profitable. And trust me, it is all possible. It is possible, but it's not possible. They cannot give you their strategy on a golden platter and say, here you go. These people, they have refined it themselves. They build up the intuition. They sharpen their sword every single day, and they show up every single day, and stuff like that gets rewarded. It's the compounding effect. Do not try to get rich quick, because in trading, there is no way to get rich quick. There just isn't. There is a way to get rich the really hard and the really time intensive way. And trust me, it is really lucrative, but you are going to have to work really hard. And that's it. That's my holy grail. If you are looking for a mentor or for like-minded traders, I do have a community for that. I will leave a link in the description. Feel free to check that out. If you have some questions for me related to this video, I will be available in my free Discord server as well. Feel free to send me a message there or a question, and I will try to get back to you as soon as possible. Guys, I really hope you found some value in this video. If you did, I would really appreciate it if you could simply leave a comment, and you can comment me exactly what you liked about this video or disliked about this video. If you liked it, of course, leave a like. And if you want to have more content like this in the future on your homepage, I highly encourage you to subscribe to the channel. I appreciate you for your time, and I congratulate you for sticking till the end of this video. This means that I know that you are serious about this, and I know for a fact that if you stick to it, no matter how hard it is, you will make it. So good luck to you, and I will see you in the next one. Bye-bye.